This is Trend Following Radio, where great thinking comes alive. Nobel Prize winners, legendary traders, best-selling authors, and the pros that know what drive us irrational human beings. I am your host, Michael Covel. Not filtered, raw, honest. That's my passion. On the show again, originally featured in the Market Wizards book by Jack Schwager, a man who I believe had the first $1 billion plus trend following fund. This would be trading legend Larry Hite. Larry, who I consider a friend, is always willing to come on here and take whatever questions I'll throw at him. So without any further delay, without any big setup, and hopefully you've heard the many other conversations I've had with Larry on this show, let's jump right in. I hope you enjoy this conversation with Larry Hite. First, let me ask, how are you? Are you good?
Pretty good. I do have one thing to say. I was very influenced by you because one of the things that I've developed, I have a trend-following mindset. I really run my life on, in my mind, a bet. How much I can win, how much I can lose, the probabilities. So I think most of my answers will be boring in a way that it's a mindset that we both share.
We're not boring. I'm not boring. You're not boring.
No, a mindset.
That's an interesting way to say it. The trick is, how do we get other people to come along with the idea that the mindset you just described is cool, is sexy, is smart, and is the way to go through life? I mean, that's the trick.
I'm going to give you one answer. I don't know if I want to print this totally. $70 million from zero.
You mean you?
Meaning me.
Well, yeah, that's a nice run.
Yeah, but I will tell you, I'll give you another answer. I could do that randomly. I do not have to look at anything else. If I go in and put in a stop and I follow the trend, I'll get rich. I'm not saying perfect or anything else. Cutting your losses, David Ricardo, is really all you need.
You wrote a book. I've written a few books. I think our books are really just longer explanations as to what Ricardo is saying.
Correct. But I am telling you, if you look at Alex Raisman, who looked at 800 years of data, you looked at 200 years of data recently, some guy in Europe, forget his name, but a very interesting name.
Jean-Philippe Bouchot.
Yeah, yes, exactly.
I'm like your assistant mind.
I don't see well. Wife has noticed that you don't seem to be well, but you can tell me about a girl's ankle 500 yards away. What is that about?
Let me tell you what that is about, Larry, is the moment you lose that, the moment that I lose that, then we have to retire.
Yeah.
There's an intricate biological analysis going on when you examine the ankle. Now, we can't go too far into that subject because otherwise they might ban us or cancel us, but that's what's going on.
Yeah, and by the way, she looked, the same thing happens with her. This is not a one-way street. I mean, I go to Faena in Florida. This very expensive hotel. This guy, Alan Faena, has bought up a large part of Miami, which is turning into a community built around the arts. He's made himself a billionaire. Now, as you go into this place, there are all these young women, very good-looking young women.
Good ankles?
Good ankles, great waistlines. And I'll tell you something. If you were not a man in the world, you would have thought you were in a brothel. They dress that way.
Larry, are you telling me it was different than when you were 25? Are you saying things have changed?
No, I'm saying that what Jesse Livermore says is that nothing ever changes. If it wasn't for guys looking at girls or girls looking for guys, none of us would be here.
There you go.
If you look at trading, let's say you're running a system. The system goes through a drawdown. You feel bad. Condition myself not to feel too bad. But the point is, I distance myself. The guys that I know who came up with me, it was very interesting. A lot of us didn't know each other, but we all did the same thing. We all went out and searched for data. Then what we did, we moved averages. Moving, just using a simple Donchian tube, not having stupid bets. Stupid bets is very simple. You can define that. It's where you can lose a lot of money.
Can I use a Larry Hite aphorism here? Because I think it fits well.
Sure.
I think I can attribute this to you, and it goes exactly with what you're saying. Don't bet your deli to win a pickle.
That's right. That's exactly right.
Let's explain that, because, I mean, some people might be thinking, okay, Larry sounds like a pretty interesting guy, a cool guy. He seems very casual, and he's got this aphorism, don't bet your deli to win a pickle. Now, the reality is, don't bet your deli to win a pickle is grounded in severe math. A lot of math behind that statement.
You wrote a book. God, what's his name? He's from the Midwest. He studied chemistry. You did a whole book about him.
Oh, Tom.
Tom does a very clever thing. He doesn't make maximum bets. He bets slightly under. It's like 1%. Probably he'll start at 75% of one base in risk. Because what he has defined, what you don't want to do is stop the game. You just don't. The best trade of the last decade, I thought, I don't care how it works out, was Jones taking 1% of his assets and putting it in crypto. Now, let me tell you something. I'm not a big crypto fan either way. But think about what he did. He bet 1% of his assets. Any trader in the world loses 1% at least of his assets every day. Win and lose. But what he did was, in 10 years, that 1% could make 100%. And that would double his family fortune.
You know what's interesting about that bet? It's very similar to a trend-following bet. I think he's pretty much saying, though, and what you're saying as well, is it's a trend-following bet, small percentage of overall capital. But for that particular bet, he doesn't really have a stop.
No, he does have a stop. His stop is the 1%.
Oh, okay. There you go.
That's the beauty of it.
Right.
By the way, I was trying to teach a guy. I said to him, how much money you got in your pocket? He said, $20. I said, give me these $20. And I'm advising his career. I said, well, didn't you ask for your money back? He said, no. I said, that's the start of a good bet. Because I could take this 1% all day. And I can calculate what my chances, having done the thing 1,000 times and measured it, that I'm going to make X number of wins. And basically, in my trading, I make $2.50 for every dollar I lose, which made me all this money.
Let me interject another Larry aphorism that I've got here on my screen, which I think sums up what you've been saying the last few minutes. I have two basic rules about winning in trading as well as in life. Number one, if you don't bet, you can't win. Number two, if you lose all your chips, you can't bet.
That's exactly right.
Well, you said it. It's yours. I'm stealing from you.
Actually, it's a takeoff from Warren Buffett. You're the stupidest guy I ever met. Was certainly way up there. This guy was driving a car. I lived out in New Jersey, and he was the driver. I called him, I used him. I didn't drive into work. The guy tells me he's always the fastest guy at any race. Wait a minute. So you're the fastest guy at any race, and you're working by the hour in a suburb, driving guys like me around. What am I missing? He says, well, I tend to crack up. I said, this is really a stupid guy. The two qualifications to be in the 500 to win it. When you got to get into it, and then you got to finish. If you've got the fastest time around the track, doesn't matter. But in the last lap, you piled into the wall. Finishing is what this. Everything you start has an end to it, but you got to get to the end to win. So the fact that this guy, and I don't know how much bullshit he had, you're not going to get anywhere if you don't win. And winning means you got to finish.
Let me add an aphorism in here also that I think speaks to what you're saying. Courage in a speculator is merely the confidence to act on the decision of his mind. Now, that's from one of the old guys like 100 years ago, but I think that's great. Courage in a speculator is merely the confidence to act on the decision of his mind.
Right. The way he does it, you do it very easily. If you really want to be long, take 3% of your assets, buy a year option if you believe that the market's going up. Then you can bet the whole 2-3% because you're going to do it next year again.
You're giving people a modified method to get them in the thought process of trend following.
Yeah, but trend following alone doesn't work unless you do the money management. My wife is a lovely, charitable young woman. She had this very nice girl who was a broker who she met. I don't know where she met, doing whatever. This girl worked for a major bank. I look at her account. I said, you're down 50%. She said, well, what do I do? I said, well, get rid of all the losers, and you'll be there to play again.
But Larry, the losers might come back.
If you lose all your money, you have nothing to come back to.
This is a young lady like right now in the current modern time, and you were helping look at her account.
Yeah, she was my wife, but I didn't look at it, and I said, this is Goldman Sachs handling it. Yeah, but it says your loss. It wasn't Goldman Sachs, but it was one of those names. Prudency kind of bullshit. The great thing about losses, you can make money with losses. You can. Every loss you have, if you're, let's say, a high-income person, the government is paying 40 to 50% of it. You can write it off against winnings. It gives you something back. Now, it's a bitch to lose, don't get me wrong, but I lower my taxes, and I live in a really stupid place.
Let me keep you at that Goldman Sachs for a moment. You had a long career, a lot of success. You're not a mean guy in any way, shape, or form, but I'm curious, when you started to have success, given your background, just kind of a little bit of a rough and tumble background, street smarts, work your way up, natural math gifts. But here you get to a situation in life when you start to have some success. You must have had to regularly sit down with Goldman Sachs, the young Goldman Sachs analyst types, that they went a completely different path than you did.
Robert Rubin, who I happen to share a vacation home near, I got to know his wife, and he seemed like a pretty nice guy. He basically helped Clinton balance the budget. And I only had, in my 81 years of life, no one ever balanced the budget but Clinton. None of them. It's extraordinary. I understand what they really are.
What are they?
They're salesmen. They're exactly like the people on television. I'm sitting there, I have this girlfriend. She has a boss. And I said, well, Larry, if you like commodities, my boss does that. Now I'm in my hippie days. I'm wearing a buckskin jacket and jeans.
Was there a ponytail on Larry Hite?
No, but I did have bus. The guy tells me if I give him $5,000, he's going to give me $1,000 a week. Now I don't know anything about pork bellies. What did I know about him? I wear buckskin jackets and jeans. He has to show up with a suit and tie. He comes in from the suburbs, and I'm sleeping with other girls.
Back to the girls again. What happened? We're going to the markets at Goldman Sachs, right back to the girls.
Oh, I would tell you, I told you about my friend Harry, right?
Yes.
Yeah, but that's what I really learned about probabilities from Harry.
Tell that story because it's great. I mean, people have not heard it. It's fantastic. It's a great probability story.
What happened was my bosses really never cared when I came in. As long as I made them money, they just really didn't give a shit. Everybody else had to be in at certain times. I did not have to be in. I had to just invent shit that people will buy. Harry and I are leaving, and I had a girlfriend. A couple of girls slept over. I slept their places. But Harry, every time I see him, not only is he with a girl, but they are knockout girls. So I say to Harry, where do you get those girls? He said, I don't. It's not where. He said, how? I said, okay, give it to me. He says, when I see a beautiful girl, I walk up to him and say, my name's Harry. Would you like to have coffee with me? I'd like to know you. He says, you 1 out of 10 would go, yes. One of them who went from the court, then go to coffee, wind up sleeping in his house.
It's 1 of 10 strangers on the street will say yes. When you get 10 of those strangers to say yes, one of those
sleeps over.
There you go.
I'm 30 years old. I'm single. And now he's talking about 2 subjects that I'm really interested in, sex and probabilities. That's how I got on the whole Bayesian kick, because I thought Bayes' way was the only thing that would work in a market, because the base is always changing. I went out and tested Harry's idea. I was very thorough in doing this. First, I did it. Yeah, I got pretty good. And then I said, well, I wonder what would happen if I just did this with really great-looking girls. Not attractive girls, but great-looking girls. Month of that stuff, and I said, hey, good. I'm getting better returns from very good-looking girls than I get from nice-looking girls. So then I took another month, and I said, I'm going to go with not good-looking girls. And this is what really amazed me. The not-looking girls were not easier. In fact, they were harder. The girls that really I had my best shot with, statistically, were the best-looking girls. And I had a cousin of mine who's very good-looking. And I was mystified. She said, Larry, there are a lot of guys that I would go out with, but they're afraid to ask me. Our whole thing got ruined about 6 months later because I fell in love with my first wife. We were married for about 25 years.
That's a good ruin, though.
Yeah. Really, it was amazing to me that happened. It's a lot of life is that. I have this one friend. He's 91 years old. He comes from a family of judges and top lawyers. Very smart guy. And one day he says, Larry, I don't always win the cases that I really think I should win. On the other hand, sometimes I win in cases I don't think the facts really, I shouldn't have won. Because a lot of things just happen, and that's probability. The guys who quit in our business either have no sense of probability or just people who give up.
Obviously, you're giving wisdom far beyond the market. You're just talking about life and everything.
Well, it's what I see. For instance, in America, probably in the entire world, people who take a chance and are aggressive do better. Let's say there are people I've noticed this. They want to be right. They seem to want to be right more than making money. And if you really think that you can't do something, by not doing it, you've proved that you couldn't do it because you didn't. But if you go in and take a shot, you've increased the odds enormously by taking the shot. Brilliance of what Paul Tudor Jones did was he has a bet that could double his net worth for the family. By losing 1%, he wouldn't think about that. The brilliance is not the trend following. It's how you structure the bet. And that structure is the key to winning, not following the trend. I could go in And I've done this thousands of times. I go into the market randomly. That's the first thing Alex Grazeman did the day he walked in.
Alex, who worked with you for a long time, great trend following book out there that people should check out.
Yeah. I said, I wanted Peter Matthews said, well, we just have a better system. And I have a way of proving. I said, Alex, can you randomly select? So first you have to randomly select. You flip coins, and it basically told you what you're going to bet. And then you flip a coin again, tells you if you're going to go up or down. The only thing I had in this test was if it went down 2%, you had to leave.
David Ricardo rule.
Yeah, this is David Ricardo rule. I spent years reading that rule. When he said, don't refuse an option, it took me years to figure out what an option was. He wasn't talking about an option.
He was talking about asymmetric bets, wasn't he?
Yeah, he was taking that. I'm going to take it. He said, never refuse an option. And then if it goes against you, get out fast and let your winnings roll on.
You know what's so amazing about that quote from him? And for people that need to go check it out, just Google David Ricardo trend following. You'll see the quote that comes up exactly. Never refuse an option. Cut your losses short. Let your profits run on. I think that's the quote. What's so amazing about that is he said that probably either in the late 1700s or the early 1800s. Here you and I are having a conversation in 2022 about a comment a guy said hundreds of years ago. It's fascinating that he was able to reduce all of this complexity. He didn't have software to backtest anything, but he reduced all this complexity to that one line. How the hell did he do that?
I got something even more major than that. There's a woman I know who is about 90. You remember the Beach Boys song, The Little Old Lady from Pasadena?
Yep.
She is the little old lady from Pasadena. Her grandfather gives her $25,000. Now, she doesn't need money. She comes from just to be given $25,000. Not many people get that 40 years or 50 years ago. There's a lot of dough. I said, well, what do you do? She says, I don't know. He says, well, I buy it. I buy it. If it goes against me, I sell it. I get rid of it quickly. I said, well, do you use moving average? And he looks at me and says, Larry, I bought it to go up. It went down. I know this woman.
What you're really saying, though, is in modern days, a lot of people are overthinking this stuff. If it's supposed to be going up and it's going down, then get the hell out.
The thing about efficient market, it's amazing because it makes a supposition that if you get the information, you'll know how to use it. But that's not the case. People don't do that. People will be tied to their emotions, or the guys who really... I once had a friend of mine who literally, his father picked up trash off the highway. That was his job. He stumbled into options and he became a very good option arbitrageur. He and I were trading silver. And he's got a lot of facts. Silver starts to fall. I do what I do. I leave. He said, Larry. And he goes through like a whole liturgy of why silver can't go down. Remember his name was Scott. I said, Scott, that may be true, but the market doesn't agree. I'm leaving. And Scott went from living in a mansion in England to living out of a trailer in Utah.
That example that you bring up, I've had this conversation recently with a bunch of younger guys about Bitcoin in particular. They lay out a scenario for why they believe in it. And I think their scenario makes a lot of sense. I think they don't trust the system. They don't trust the various central banks around the world. I get it. It makes a hell of a lot of sense. But then from a trading perspective, it doesn't make sense. Meaning, if you're going to believe in this asset, okay, you can do it the way Paul Tudor Jones did it and just put it in and set it, forget it. We don't necessarily know if he could be trading it too. I think that's the interesting part, though, is that this supposition that you point out that if you have all the data, that somehow or another that translates to the trading strategy. And that's the part that's always thrown me about fundamental analysis. Okay, I've got all the fundamentals, but how the hell does that translate to a rule set to buy, sell, and to bet the correct way?
They don't. I remember it turned out they were secret clients of mine when I was in the tax business. And these are major guys at Salomon Brothers. And I said, well, why don't you use stops? The guy said to me, Larry, we are the market. You know, Salomon Brothers no longer exists.
Yes. Okay, I have to shift you into some aphorisms, though. I want to just get your first take on these. Some of these are classic ones that everyone knows. I don't think sometimes we talk about them. And I'm not so sure a lot of young people today, even if they hear an expression like this, even if they know what the tape is, they still might not understand it. And it's quite simple. Maybe this is a Livermore one. Don't fight the tape. Quite simple.
Let's talk about Livermore. Livermore wrote this book, How to Trade Stocks. And he had a 10% rule. If he goes down 10%, fucking blow it all out. The same guy lost his fortune 2 or 3 times. The last time he went out in a hotel in New York and blew his brains out. Why? He had the exact rules for winning. Seriously, he did. For me to take a loss, or let's say you buy something and it goes up 500%, and then it goes down 200%. Well, the 200%, you can get out. But in America at this time, you will now be taxed 50% on your winnings. So not only have you lost the money, you have to pay a penalty for getting out. I don't understand that. And Livermore didn't live in that space, and he had the rules. If you took Mark, I forget what his Italian name.
Mark Minervini.
Yeah, very smart guy. Great story. I would never do that. Larry Hite would never do that. I can't imagine anybody, but people have these weird things that they've lost money, and somehow you're a loser if you take your losses.
They personalize it. I wanted to write a book with you about all the things people do that they destroy themselves. You know why that book didn't happen, right? Because Mike got on an airplane, went to Asia, didn't come back. It's true.
Okay.
That's true. We were planning the book, and then all of a sudden I got on a plane, went to Asia. But you know what? That's good, because the fact that we didn't do the book, then you wrote your own book, so it was even better.
Okay. But the point is, why do these people do this? If you go out, either A, they don't have a method for handling the risk. You have a guy on who's supposed to be an expert on cycles. And I remember I was in Asia, and I'm saying this, my wife wanted to go there, we saw some temples and all. So I'm reading his book on cycles, and I'm saying, what the fuck is going on here? No, I mean, he was a very knowledgeable guy. He made his first fortune. His boss told him to go look at junk bonds. And he became friends with the guy who went to jail.
Milken.
Yeah. I would love to ask this guy. I could do cycle pretty well with a 200-day moving average.
Meaning your 200-day moving average will give somebody who thinks they believe in cycles their version of a cycle, but the reality is it's not the same thing.
Yeah, no. It's the cycles are made because they're made, and you see all that shit happening. But more importantly, you could just say 200-day, if it's above the 200-day, a cycle may be forming. So it's worth a bet. If it goes down.
You're bringing up a really important issue on the cycles, though, because so many people get caught up in this idea that there might be some cycle. And so then that governs what I think I shall do in the future. Whereas you say, I don't know what's going to happen in the future. I can't necessarily imagine it, but whatever happens in the future, I have my stop loss, so I know what my plan is. Whereas the cycle guys are like looking up to the clouds and stuff for some kind of act of God to give them a sign as to what to do. It's a very different way of thinking.
Yeah, he's a very well-educated guy. Went to Harvard and all that shit.
All that shit?
Yeah, well, I really don't. I really don't see it because I probably told you this story. I'll make it short because it was one of the major turning points in my life. I'm working at a small place called Edwards and Hanley, and a guy named Bob Zollner is running it. Bob seems to have an affinity for really good-looking women. And
we're back to good-looking women again. There's an undercurrent to this episode.
Yeah, well, I can only talk about it. I'm losing my ability to do it. Zollner is an MIT graduate. There's another guy. He's also an MIT graduate. I was always taken by trend following. Here's the day I became really scientific about it. So they call me. It's 9:00 in the evening. Me and these two guys are the only people in the office. And I was pretty good trend follower. So they asked me in to look at a pattern. One guy says it's a head and shoulders. And the other guy says, no, it's an upjohn, whatever the fuck that is. I'm looking at this. Now, Zollner had made $10 million back in like 70, 69 or 68. So I don't want to be disrespectful, but I'm saying to myself, hey, fucking two guys can't agree with what's on the fucking page. They're taking the kid who just walked in.
The kid's you, right?
Me, yeah. And they can't agree. I said, I am not going to follow these patterns. The averages, I love averages. Why? Because I really know that if it goes over 10, I know. And anybody else looking at it, 11's over, 9's under. There's no debate. For two guys who go to one of the most prestigious mathematical engineering places to be able to tell what's on the fucking page was amazing to me. I said, this is bullshit. They got to come to me to ask what I would think.
What you're saying, though, is at that moment in your life, these guys, one's made a lot of money already. They're at this nice firm and all this other kind of stuff. But then you just realize, take away all the decorations, take away whatever money they have. They're just guessing. And they had no plan. And so that was an eye-opener for you. No plan.
Oh, yeah. They didn't have a method of validating. If you go back to an average, you at least know exactly what's on the page. I'll take all kinds of bets. I never make a bet that I don't put a stop in.
Do you think Ricardo had a moving average? Is that how he figured that out?
Probably. He was one of the guys who founded modern economics. You want to know why David Ricardo could do so well? I'll give you a little story that is all true. I went to a high school. It was just a plain old high school. It was not a smart kids high school or dumb kids high school. Anybody in the neighborhood could get out of the 8th grade, got to go into the 9th grade in that place. So there's no pre-selection. But it happens to be a Jewish and Italian neighborhood with a few mix. I think in my grade there was one black person. A friend of mine who I went to high school with, a good friend of mine, he went to a charitable event where me and Henry Jarecki and Papa, we were rescuing scholars. I still give them money. And it said that I given $1 million. I hadn't given $1 million. What I did was I had somebody make a tape, the whole story. The guys and girls who were seeing people had this one video, and they showed it so that everybody saw the same message. And I had given money to make sure that I got to a lot of people. When I was honored, they say Larry Hite gave $1 million. No, Larry Hite invented the widget that made $1 million by making the message one thing and everybody gets the same thing. My friend, who was with me at the time, very impressed with this. He was a headhunter. He kept up with everybody in high school and kind of shit. They were honoring people. He wrote about me to the selection board. They were so impressed, they honored me. Now, I was a 65 student. Believe me, he's dyslexia. And before me, he talks about another guy. Whatever this guy's name was, he was dressed kind of like a Hasidim, but not full out. And he said, well, all right, call him George. What happened with George, we told all the teachers to leave George alone. If he sits in the, just reads, do not bother George. George turned out to be one of the major guys in space geography in the world. After George, the guy says, now let me tell you about Larry. Frankly, we did not think Larry was going to ever graduate. He goes through this whole film, but turns out Larry went a different path, but he did extremely well. My friend, I wrote them like he would have selling why that committee should happen. Now, I'm sitting next to this guy, which I was really honored to be with a guy that intellectually, that's way over my head. A guy called me from the New York Times, and he's a Jewish guy. His name is Rosenthal. And he says, okay, Carole King, a lot of people like Spock, Chuck Schumer, all these men, we all went to the same school. So he said, why do you think that is? And I said, well, I'll tell you. This is going to go back to David Ricardo. I said, well, Jews have been around for 5,000 years plus, and they were very handy for kings. Jews couldn't own land, but they could do merchant stuff. They became lenders. And what kings would do would borrow from the Jews. And when they hit the limit, they confiscated and threw the Jews out of the country. In America, you find that this is a place where Jews got to keep their winnings. To go back to David Ricardo, his father was a trader. He was disowned by his father because he married a Quaker girl. Why did Jews do so well? I'm going to tell you. The Romans conquered Israel. The Romans admired the Greeks a lot. In the Talmud, it's a strange page. It's a page, and it's in the middle of the page with a big box around it. You have rabbis' comments. They took from Aristotle the concept of statement and proof. Now, once you have that from a child, a boy, statement and proof, you have tremendous intellectual machine. Yes, David Ricardo had that. He observed, he quantified. That's why he could do it. And that's why Larry Hite can literally go in randomly and make money in the markets.
You know what's interesting about Ricardo, too, is that here we are giving him a lot of credit, rightfully, because it's in print. There's a very good chance that he was influenced by somebody else. I mean, there's a very good chance that this method of thinking in terms of putting together a system where you cut your losses and let your winners run on, where you're agnostic to all the fundamental information. You don't care. There's no connection between that and the system. I mean, there's a very good chance that that was laid down
by his father.
I'm going earlier than that. I mean, if you and I went, if we stopped right now, our life right now, and let's say we went to Europe and we started going around libraries and doing some hardcore research, if we could read all assorted dead languages, we might find out that somebody had figured this out a long, long, long time ago.
Well, sure. Henry, he had 7 wives or something like that. Well, that's cutting your losses.
As we take it back to the ladies.
Well, I just say, yeah. Okay, yeah. But I was just saying,
I'm not complaining. Listen, I like the ladies. Listen, if you're a straight guy and you like the ladies in 2022, if I turn on the TV, they tell me that's something unusual today, that I should probably go have surgery, or I still like the ladies. I think you do too. So there you go.
Yeah, right. Ladies like guys. You do a lot of yoga, right?
I do.
Your yoga doesn't make you cripple. Now, you have to do a lot to get crippled in yoga. Women wear high heels. And basically, by the time they're 60, they can't walk.
I thought you were going to talk about the yoga clothes they wear.
Okay, well, I didn't get to do it. But as women get older, the feet get worse. So that's when you could see it in Miami. Anyway, Tom is a very interesting guy. He didn't make money for years. What made him stick to it? If I read the book correctly, he was not an instant winner at this.
Well, it's back to your point about the ancients, statement proof. And then you get confidence from that. Then you get confidence. And then you don't care what all the other assorted voices are saying, because once one develops that sense of like, okay, I know what the proof is. Here was the statement. I found the proof. Okay, this is the way I'm going for my life.
Well, I'll tell you something. I literally listen to every podcast. There's a line. It's sort of a commercial, but it's a backwards paper. And it goes, if you want to trust the government on Wall Street, this is not for you.
There we go, right?
People who really want to trust.
God, I don't want to trust them. I don't like them.
I'll tell you, I have never seen such despicable characters. The idea of Trump, who I kind of grew up near, Hillary Clinton, the schmuck they have there now, who turns out to be extremely, not only is an idiot, but he turns out to be a real thief. Hunter, you imagine, now you got the Vice President of the United States' son in the Army. He's an officer. You imagine how terrible it was for the Army to have to throw this guy out?
At least with the Clintons, at least with Trump, their kids look like they're okay kids on the surface and whatnot. The current guy, do you remember Jimmy Carter's brother, Billy Carter? And they made a beer about him and he was just getting drunk all the... It's kind of like that again, but they don't talk about it.
But this guy's kid, the Army did not want to let this kid go. He had to be so bad. George Bush Jr. was an alcoholic, kind of a funny guy at times, but he managed to get through and not get kicked out of the military. You're talking about the Vice President of the United States child in a political system. He has to be so bad.
The real point is that, sadly, this is where society is, that it's kind of like a one-party state in the sense that these things don't matter anymore in America. There's no oversight. The people only care about whether or not the government says we're going to give you money, and then they send them money, they wire them money because we've got COVID or this or that or whatever. It's a really weird time. And look, maybe this is for our next conversation because we'll see what keeps happening. But you know this, first 4 months of 2022 are historic trend following performance. I mean, I already want to update my book. I mean, it's a crazy, crazy first 4 months.
I will tell you something. I was working on half cylinders, and I made this incredible thing. I made about $20 million, not even with a full book. Wanted to know where it was coming from. Because of my dyslexia and other things, I keep very big distance from the trading. To me, I automate, and I really don't want to ever be in a position where I have to think hard because I don't have enough ability to see into the future. Oh, another thing, the test I made, which is really cool. If I told you that I would give you January 1, the stocks that at December 31st will be the top 20 stocks in a movement for the year, I asked one question. How much of your net worth would you leverage?
It's going to depend on the volatility over the course of the year.
Well, you don't know that. So what number do you think how far you think I could pull the leverage out and not crash and burn. You have the number that's going to be there. You have the number. You know what's going to be. But you actually understood. That means shit if you don't have the volatility.
Because, yeah, you're bet sizing over the course of the year. You've got to know what the volatility is going to be, because there could be a major crater during the course of the year and it ends up positive at the end of the year. What's going on in the intervening time period?
Basically, I found out you can't go more than 3 times leverage. Because on the way there, you go through some pretty big drops.
And there's some serious math behind what you just said for people that want to go figure it out. When you said you don't think you personally should go more than 3 times leverage, there's some math behind that.
I did it on the computer. I just did it 1,000 times. Most of the time, you go over 3, you're dead. It's not so serious. You just press the button and let it go. You've got the thing, tells you what it is, tells you you've got the data how the year ended. So you go back, you take the top 10. That's not really smart, whatever. And you say, all right, how much leverage am I going to put on that? But I don't know the path. So I'm standing with this guy who's telling me that he's making me $1,000 a week, and I'm in buckskin and he's in a suit. So I immediately know that this guy doesn't know what the fuck he's talking about. And my looking at this was, I said, I don't know. Now I'm going to run 1,000 bets, and I'll know basically randomly how far you can go. First day I met Alex, and he came in, I said, well, the strength of what we do is we know we don't know. But I will tell you, there was a guy named Saul Urich, and he was a concert promoter of classical concerts. He was a Russian immigrant, big international promoter. He used to have a saying that if you have a roof over your head, the sky's the limit. I've changed that. If I know what I can lose, that's the edge.
If you know what you can lose, the sky's the limit.
Yeah, because I know what I'm going to bet. When I was at Man, and we had a very big year, and I figured out, I decided to sit down and ask myself why we made all this money. Well, I had invented something that really sold, and my performance was really great. More important, I was in a place where I can make a lot of money. I was trying to think about, what's his name, from South Africa. Why does he get into places where he can make so much money?
Elon.
First of all, Eli knew how to work the internet, just like Trump was very good at saying outrageous things. Basically, he used that for his advertisement. Because if you go to a certain place, you're going to make money. Go there, and you get in the game, you're going to be... If you want to marry a really good-looking girl, forget who she is, what you want. You go to beauty contests, you'll get a good-looking girl. You might not get a nice girl or a smart girl or whatever else, but you'll get a good-looking girl. My money that I've made is, once I figured that out, I always went to where you could make a lot of money. Doesn't mean that I didn't have drawdowns, but once I knew the money management, it was the place and the technique.
I should put a pin in you there. This is a fun chat. I think people are going to like this one a lot.
Okay, yeah. Anyway, listen, have a good time. I hope you're enjoying
Vietnam.
Mostly the women.
Of course, Larry, of course.
All right, speak to you later.
I see a time when those awake will understand how to make money in up, down, and surprise markets. Whether new trader or experienced, college student or financial advisor, protecting against a crash or just trying to make a lot of money, trend following offers everyone an answer in uncertain times. To get started immediately, send me an email, michael@covel.com. I will send you the right trend following steps to take along with my free video. But if you want to buy and hold, trust the government and trust Wall Street, this is absolutely not for you.